Good evening, good morning, everyone. It gives me immense pleasure to welcome you all to this FICCI webinar on International Standards on Sustainability Reporting. My name is Vikram Kotru, and I head the Environment, Climate Change, and Sustainability at FICCI, for those who don't know me. Sustainability reporting standards play a crucial role in driving sustainable development at a global level. They are important as they promote transparency, accountability, comparability, risk management, stakeholder engagement, regulatory compliance, and sustainable development. So they provide a structured framework for organizations to measure and disclose and improve their sustainability performance, leading to more informed decision making and positive impacts on environment, society, and long-term business value. The integration of sustainability into business strategies contribute to the achievement of UN SDGs and fosters a more sustainable and resilient economy. So let me introduce to all of you the eminent panel of speakers we have today for this webinar. I would like member, welcome Dr. Hales, Mr. Neil Stewart, Director of Corporate Outreach at IFRS Foundation. Hi, Neil. Mr. Rajiv Basu, partner with PwC India and senior advisors to SASB. Dr. Mukund Rajan, Dr. Rajan is the chair of FICCI Environment and Climate Change Committee and chairman of eCube Investment Advisors, under whose leadership FICCI is driving the sustainability agenda. Thank you all for joining us and welcome to this webinar. Without much ado, let me invite Dr. Rajan to make his opening remarks of this webinar. Over to you, Dr. Rajan.
Sure. Thank you so much, Vikram, and welcome everyone to this webinar on International Sustainability Reporting Standards. And of course, very special thanks to our guests today, Jeffrey, Neil, and Rajiv. And Jeffrey and Neil, of course, are joining us from North America, where it's morning for them. So really appreciate the time you're giving for educating us, for sharing some of the latest developments with us. As many of you on this webinar are aware, the International Sustainability Standards Board, or the ISSB, represents a groundbreaking international initiative to develop global sustainability reporting standards that, as Vikram was just saying, can be commonly applied across jurisdictions and geographies. And it supports enhanced transparency and accountability of businesses for their actions and environmental impacts. The disclosures it calls for can help direct capital to long-term and resilient businesses, which are on the path to better sustainability performance and a low-carbon future. Now, ISSB itself is an independent body. It, of course, has very strong links to the International Financial Reporting Standards Foundation, the IFRS Foundation, which itself is a trusted global authority on accounting and financial reporting. And it is building on the work of and collaboration with multiple number of organizations, including, and we have a real alphabet soup here, the CDSB, GRI, TCFD, IASB, and others. It has thus far developed, and I'm sure we're going to hear more about this from Jeffrey, the IFRS S1 and S2 drafts, focusing on sustainability and climate disclosures. My understanding is that so far, perhaps very few countries, and perhaps the UK stands out, have affirmed that these standards will be a core component of their sustainability reporting disclosures, but we do anticipate that many more could follow. This is going to be important, the adoption of these standards across countries. After all, sustainability standards facilitate comparability across borders in a world where investors are seeking opportunities beyond the local markets. And consistent sustainability reporting allows stakeholders to make informed decisions about the companies they choose to support. And this ultimately would allow decision makers to have a holistic view of an entity's performance and long-term prospects, thereby leading to better informed decisions, improved risk management practices, and promoting trust, accountability, and responsible investment practices. So without a common set of standards, comparing sustainability data across companies and jurisdictions would be extremely difficult. So with that background, and here I'm saying that I'm speaking certainly for myself, but I know that many people in the audience will also have similar questions, and Vikram is going to be gathering some of these in the course of the next hour. It would be very interesting, Jeffrey and Neil and Rajiv, to understand your perspectives on some of these questions. And I've just bucketed them in 5 broad heads. The first is, of course, on the ISSB itself. Who are the key stakeholders driving this initiative? Which group or category, investors or otherwise, are helping to catalyze this agenda the most? And how much voice does the developing world, including countries like India, have in this process? I'm very grateful to you for this exposure that you're giving us on how the process is moving forward. Second, does the existence or absence of a green taxonomy make a difference to the way in which sustainability standards get deployed? And of course, in India, there's work that the Indian Ministry of Finance is undertaking on a green taxonomy, which we hope will get issued soon. Third, should the context of disclosures be influenced by whether a company is located in a developed or a developing country? And just to flesh this out a little bit more, in India, for instance, we have affirmative action programs for sections of society that have historically faced discrimination, including the tribals or indigenous people and members of what are called the scheduled castes. We don't have an exact parallel for what a lot of international ESG ratings firms use under the head of anti-racism measures, for instance. So the question would be, how do we solve for these contextual societal differences across markets? Fourth, it would be great if you could also reflect on a lot that we're hearing about this concept of double materiality, and what is the ISSB's own perspective on this? And finally, what are the plans for future expansion around the scope of these standards that you're developing, including in a number of areas that are assuming more importance of late, including biodiversity, human capital, and human rights? So I thought I'd just leave those out there on the table, but I'm sure there'll be more questions in the course of the next hour. Again, very grateful for the time you're spending and helping us to understand better the progress that we're making on international standards, something that I think all of us would welcome, but we do recognize that there will be some hurdles that need to be crossed before we have complete consensus across the international community. So once again, thank you very much for doing this, and back to you, Vikram, and then to take this forward for the next hour.
Thank you, Dr. Rajan, and thank you for setting up the base for the information we seek from Jeff, Neil, and Rajiv for next 1 hour. Thank you. So inviting Rajiv Basu, partner with PwC and advisor with SASB. Rajiv, over to you.
Thank you, Vikram, and especially special thanks for the warm welcome, Dr. Rajan, and your fantastic questions. I think these are very thought-provoking questions, particularly in the context of India. What I'm going to focus on for the next, say, about 7 to 8 minutes is India to start with, and the status of sustainability reporting in India, and a little bit of introduction of the global perspective. And I do recall that you use the word alphabet soup, where there is the soup is getting thickened slowly, and it's settling down. Let me put it this way. So there's a lot of consolidation that's happening in the global standards, and we're finding some method through the madness. So I'm going to just introduce that a little bit and tell you about how ISSB is bringing some of these standards together under its one umbrella, and how that fits in with the other standards in the overall reporting landscape. So I'm just going to introduce that, and then for more on ISSB, which is fast emerging as the global baseline standards for investors to rely on, I'll then hand it over to my colleagues from ISSB. So that's how I'll shape my presentation. And let me just share my screen to show you a few slides while I talk through. I hope you can see my slides. Vikram,
yes, we can.
You can
Yes,
see. All right. Okay. So literally, we all know about the SDGs, and I'm just giving this a bit of context because we need to answer the question every time: why do we need sustainability standards? And it's mainly coming from the SDGs. Almost all major countries, including India, have subscribed to the SDGs, and and within that there are 17 SDG principles, and some of these where you see a black dot at the right far right corner of some of the boxes. These SDGs are mainly achieved through companies' day-to-day operations, whereas the other SDGs will also be in some way or the other influenced by businesses, corporates, businesses. But mostly these SDGs, it is seen that we can influence these SDGs directly through businesses. So SDG is the basis, and it's the overall objective that is driving sustainability as such. Now, sustainability obviously doesn't come, it doesn't get implemented easily without it getting measured. And in India, BRSR reporting is the mandate that SEBI has for listed organizations to report on their sustainability achievements. Now, earlier it was BRR, now it's Business Responsibility and Sustainability Report, which literally, and for the uninitiated, I'll just talk a little bit about this. Most of you probably know about this, but I just touch upon a little bit so that we know really what it stands for. It's got two annexures. Annexure 1 contains the disclosures, and Annexure 2 contains the guidelines for disclosures in Annexure 1. So Annexure 1, which is the main section, has got main part, which has got three sections. One is the general disclosures. Section B is the management and process disclosures, and Section C is the principle-wise process disclosures. So it contains the companies are asked to report on follow 9 principles, and reporting on the essential indicators and leadership indicators around these 9 principles. And the BRSR also allows interoperability of reporting frameworks. It allows cross-referencing with other international reporting frameworks such as GRI, SASB, TCFD, integrated reporting, etc., etc. And I'll come to this a little bit and try to see how these are all coming together in some shape or form. If you look at these 9 principles, you see in some shape or form they're addressing much of what is there in the SDGs in some shape or form, and the essential indicators are the ones that the companies are absolutely required to report on, and leadership indicators are the ones that they're asked to gradually adopt. So there's a whole guidance note that's available from the Institute of Chartered Accountants, various other institutes, and also guidance available from SEBI for the implementation. This is the year. So I'm talking about the regulations, these regulations now and upcoming. So now what is happening is this year, which we have just concluded in March 23, SEBI has made the BRSR reporting mandatory for the top 1,000 companies by market capitalization. However, there is no requirement as such of assurance on the BRSR reporting just now. But what is coming up is there's been a consultation paper that SEBI has released, which talks about the BRSR core. Now, what is it? It's a set of key performance indicators under environment, social, and governance attributes that need to be reasonably assured. So we now have the reporting in place, reporting requirement in place for the top 1,000 companies. Now we're getting into a situation where there'll be a core set of indicators that the companies will need to have reasonably assured. And this assurance mandate will be from FY24, it will be for the top 250 companies by market cap, and progressively for the top 500 and the top 1,000 companies. So we are slowly getting into a regime where BRSR will not only be mandatory, but also need to be assured. Now, this is the Indian scenario. And as Dr. Rajan talked about, here's the alphabet soup, a little bit of that. Globally, we have several prominent reporting standards. We have, this is, you'll find this anywhere in the internet. I just picked it up from one of the prominent sites. It summarizes it very well. It talks about what is the framework, what are the objectives of that framework that we are talking about, and who's the audience of that framework. So it's important to note that these frameworks do not talk to the same audience, right? And here I would like you to focus on the fact that GRI talks about all stakeholders. It gives you industry specific guidance, but the audience is all stakeholders, so it goes beyond investors. Whereas SASB actually gives you industry specific guidance, but it's focused only on investors. And integrated reporting also, though it doesn't have any specific industry guidance, it focuses only on investors. So you see the audience of each of these standards is changing, and therefore it was important that we had something which was talking only to the investors, because the financial reporting mainly is for the consumption of the investors. We also needed something of a sustainability reporting which also focuses on the investors, and ISSB is coming and filling that space very fast. In ISSB, as gradually the ISSB has taken shape, it has consolidated the integrated reporting framework, SASB framework, and the CDSB framework. And it will also refer to the TCFD guidance so far as the climate standards are concerned. So you see, there's a lot of frameworks that are relevant, mainly from the investor's perspective, that is coming together under one umbrella, which is the IFRS sustainability framework. And I'm sure Neil and Jeff will talk more about this when they focus on ISSB. Now, how do these stack together? So we have the IFRS accounting and the IFRS sustainability, which together addresses the investor's requirement for financial and sustainability related financial disclosures. So these two, give you an integrated reporting of the investor's requirements relating to sustainability and financial performance. Whereas the other corporate reporting standards, which are multi-stakeholder focus, that will be there as an outer core that will, that will cater to the needs of the other stakeholders. So ISSB is working within a broader reporting landscape, but it has got a certain focus which meets the requirements of a specific stakeholder set, which is the investors. Now, so we have this BRSR reporting on the one hand, and sustainability reported financial related financial disclosures, which gradually ISSB is taking that space of providing the sustainability related financial disclosures. It's fast coming up as the global baseline for that. So there are these two standards, and there is certainly a handshake between the two, because BRSR already provides for reference to global standards. Wherever a company is already adopting other global standards for a sustainability reporting, BRSR allows for that to be referenced in the Indian reporting scenario. So you see how ISSB is gradually becoming relevant, and because there is such a close such a close proximity between what BRSR is asking you to do in India and what ISSB is catering globally to the investors. There is a need for us to understand in detail a little bit more about the ISSB standards. So more on that from Neil and Jeff, and I'll hand it over to Neil now. Neil, it's over to you.
Great, Rajiv, thank you very much. And Dr. Rajan, Vikram, thank you very much for hosting Jeff and me. I think that was an excellent context setting and introduction to what the ISSB was created to do. The IFRS Foundation created the International Sustainability Standards Board in 2021 in response to strong demand for rigorous, reliable, comparable sustainability information to enable informed investment and economic decisions. I'd like to give a little bit of a explanation of that background before I hand it over to Jeff to explain the standards themselves. So really just to illustrate what Dr. Rajan already introduced us to about this investors' need for standardized sustainability data. Looking back over 15 years, I remember being at the launch of the PRI at the New York Stock Exchange, 20 signatories, $1 trillion in assets under management, introducing this idea that investors are committed to using environmental, social, governance information in their decision-making. At the time, it was a revolutionary concept. Fast forward to today, over 5,000 signatories, more than $120 trillion in assets under management. Essentially, the world's investors committed to seeking disclosure on ESG and committed to incorporating that information into their investment decisions. So I think we can all agree that for companies today to access capital in the global markets, investor-grade sustainability disclosure is a must. Equity capital, debt financing, lending across all asset classes. This information is now woven into the fabric of capital markets. We can also acknowledge that the information needed by investors is specific, often different from what was in traditional narrative-driven sustainability reports. So in 2011, for example, SASB that was created and welcomed by investors because of its focus on financial materiality, supporting investor decisions. The world's leading asset managers and asset owners support the SASB standards, license them, use them in investor screening. So it's against that backdrop that the ISSB was created. And as Dr. Rajan explained, as Rajiv showed and I've shown, sustainability factors are now part of mainstream investment decision-making. In multiple consultations with the market, the IFRS Foundation heard feedback that investors need high quality, globally comparable information on companies' sustainability risks and opportunities. And yet, despite all the reporting that companies were doing with that alphabet soup that we've talked about of standards and frameworks, voluntary standards and frameworks, investors were just simply not getting what they need. So the ISSB was launched to address that fragmented landscape that was adding cost and complexity and risk to both companies and investors. Our work is backed by the G7, the G20, by IOSCO, that's the International Organization of Securities Commissions, by the Financial Stability Board. The ISSB's launch at COP26 in 2021 was supported by finance ministers and central bank governors from over 40 jurisdictions. So the ISSB then is an independent standard-setting body sitting alongside the IASB, which sets the International Financial Reporting Standards. And in this three-tiered governance model, I want to emphasize that top level, the monitoring board, which is made up of the securities regulators of the world, chaired by IOSCO. And this really gives the ISSB public oversight and accountability. Later this month, the ISSB will issue our first two standards. IFRS S1 and IFRS S2, which together enable a truly global baseline of sustainability disclosures. The standards are designed to be decision useful for investors. That's the information to support investor decision-making, cost-effective and efficient for preparers, and truly market-informed with a transparent and rigorous due process. When we say we are creating a global baseline, as Rajiv explained, that handshake with jurisdictions is so important. What we call interoperability, meaning that our standards facilitate compatibility with requirements across different jurisdictions. And a good example of that was raised by Dr. Rajan in his questions. Different countries have unique policy goals, perhaps around green taxonomy. Different countries have unique characteristics and needs. For example, in India, the rights of indigenous people and guarding against discrimination. And so the ISSB's global baseline is that baseline for the capital markets, and then facilitating jurisdictions to build on top of it to meet policy goals and different characteristics for different jurisdictions. We have a jurisdictional working group comprised of China, Europe, Japan, UK, and the US, with IOSCO as observers, which is working to ensure that global baseline meets investor needs, but reducing reporting duplication, improving efficiency. We also have a Sustainability Standards Advisory Forum with jurisdictions from around the world. That group's initial 13 members include the Institute of Chartered Accountants of India, ICAI. So really part of our process already. We use the TCFD architecture as the basis of our standards that facilitates interoperability, again, especially given the many commitments by G20 countries to introduce climate reporting based on the TCFD. And we also have an MOU with the GRI to make sure that we're ensuring maximum interoperability between our requirements. Let me hand over now to my colleague, Dr. Jeffrey Hales. Jeff is a member of the 14-member ISSB. He's the former chair of SASB, the Sustainability Accounting Standards Board. Jeff is also a professor of accounting at the University of Texas, and he has held important roles in standard setting with the US FASB, Financial Accounting Standards Board, as well as the UK Financial Reporting Council. Jeff, I'll hand over to you to explain the standards.
Thanks, Neil, and thanks to everybody for being here, and specifically for Rajiv, Vikram, and Dr. Rajan for their opening remarks. It's great to have the opportunity to talk about the important work that's happening at the ISSB, and I thought it might be helpful just to, if I could share a little bit of, before I dive into the technical work of the technical content of the standards and what our future plans are, just to give my perspective from kind of inside these organizations, because I had for 10 years I've been involved with the SASB standards developments from the very early days to eventually chairing the standards board, but also through that role had a position in the Climate Disclosure Standards Board on their advisory board as well. And so, one of the questions that I'll get asked sometimes is, why are these organizations agreeing to be consolidated together and effectively like sunset the work that they've been doing, which is interesting because before we agreed to do that, one of the questions that I would often get is like, why can't we have just one standard, and so there, so people always wonder like why can't things be different than they are? But I think it's important to kind of understand a little bit of that dynamic. And one of the things that we had heard, and this was kind of a point made by Rajiv and emphasized by Neil as well, but we were definitely hearing in the marketplace that it was very hard for companies to figure out which sets of guidance and which standards were actually going to be useful for which purposes, and sometimes oftentimes they were serving different purposes, different user groups, or sometimes the same user, the intended user, but focusing on a subset of the issues or having a different approach to the way that they would provide guidance. And I think that that's important because because it did create challenges in understanding what exactly would best meet those different users' needs, and also trying to understand the nuances between them. And so one of the things that we had seen from SASB's perspective is that when some organizations would say, we're focused on investors, and we were saying we were focused on investor needs as well, people weren't always sure, were we talking about the same investors? Did that mean we were aligned? Were we not aligned? And so there were calls for consolidation, and some of that consolidation was already starting to happen before the IFRS Foundation got involved. But what I think about what the IFRS Foundation did, it was super important, because it's a major player in the standard setting world, and so they were going to have an impact regardless of the way in which they launched this initiative. But it's really important to understand, like, I think that the way that they did it was really solid, because the first thing that they did is they said, we're not going to try to consolidate the entire alphabet soup so that there's going to be just one standard setter that tries to do everything, because I don't think that that's actually feasible. We don't need accounting standard setters to try to not just create financial statements, but also do everything to supplement financial statements as well, including broad stakeholder reporting. So we don't want to focus. We don't want one standard setter to do everything, and they recognize that. But they did also recognize that when there is agreement about the user that you're trying to serve and the type of information that they're going to need, that's an ideal place for consolidation. And so they identified the investor-oriented private sector standard setters that were focused on sustainability issues. And they were able to negotiate with each of them to say, do you believe that we'll be able to take your mission forward in a way that's going to best serve the capital markets? And so they got agreement from those organizations before they announced that they were going to start the ISSB. And then what's also really interesting is that they did the work in the background by gathering these and some related organizations to say, what of all this different related guidance, what would it look like if we tried to bring it together and not just build something from scratch, but actually try to consolidate the best practices that are out there? And so there was a technical readiness working group that worked on that. And so when they announced this at COP, which COP was it? COP 5? Wait, COP
26.
26. All right. I had a cop out on my COP moments just now. So when they announced this, at COP 26, they also released working drafts of what these standards might look like in general, like a general approach to reporting for investor needs on sustainability issues, and then on climate specifically, which was also very targeted, because the feedback the IFRS Foundation had received was, you can't be a climate-only organization. You do need to build on the best of existing practice, but you do need to also prioritize climate. And so that was the goal, to sort of signal that from the marketplace. And then after establishing the ISSB, those working drafts were then translated into exposure drafts and put out for public comment to say, what does the marketplace think about this? And and then so going back to like Dr. Rajan's questions about like, who are the key stakeholders? You can look and see who commented on those the exposure drafts for S1 and S2, and we get a lot of feedback. But what we definitely prioritize when we listen to feedback is thinking about, first of all, like, what are investors asking for? That ultimately it is for investors. There's no point asking companies to do anything if it's not going to actually meet investor needs, at least for an investor-oriented standard setter. Like that is the primary goal. But then we still have to think about companies' needs when we think about investors might ask for information, but if companies find it too burdensome, too challenging to be able to implement what it is that that investors would ideally like, then we have to factor that in as well. And so there's always this cost-benefit trade-off that we have to think about as well. But I think of investors and companies as being two of the major stakeholders that we think about effectively playing like an intermediary role between them to understand what are the issues that investors are asking about, and then how can companies actually provide information on that in a way that's going to be sufficient for our investor needs, but also cost effective for the companies to provide. So that was the goal, and we're now at the point where we've been able to take that public comment that we received on the exposure drafts and redeliberate key aspects of that to try to address the points that were raised, and so we're very near now the point where we're going to be publishing S1 and S2. So let me maybe with that kind of tee up, I hope that was helpful, but with that tee up, maybe just spend a little bit of time talking about what's in the specific standards, starting with S1. So S1, you can think of this as being the goal that sets out the objectives for a company that wanted to say, we are reporting in line with the ISSB standards. What is it that would be expected of that company? And so what's articulated in S1 is that companies would be expected to provide material information about sustainability-related risks and opportunities. And the way that we think about sustainability-related risks and opportunities that are going to meet investors' needs are the ones where we would expect those sustainability-related risks and opportunities to, like, management of those issues would be key to thinking about what are the, what's going to affect the company's ability going forward to effectively deliver on its strategy, to like what's going to change the set of opportunities the company has if it doesn't, it's got to be a significant enough sustainability related issue that it could affect the company's strategy, that it could change its prospective cash flows or the risk of those cash flows going forward. It's not to say that companies don't need to manage all sorts of issues, but the ones that it's always more difficult to run a company than it is to talk about what the company is doing. So when you're talking to investors are going to need to focus on what I think of as like a more strategic way of thinking about all of the things that a company is going to do. And so S1 helps that process by laying out the objective of what companies are going to be meant to be talking about to comply with the ISSB standards, and then creating guidance to turn that focus on the key issues and material concepts of like material, what's significant enough that it could affect an investor's decision about whether to be invested or provide capital to a company. Take that focus and turn it into actually decision useful information, not just about a specific company, but even also when you think about comparing that company to its peers. So comparability is a big part of that. All of this is laid out in S1. And so some of the ways that we take that focus, which is here in that first bullet point, and turn it into decision useful information, is to start to unpack what it means to provide material information and turn it into decision useful disclosures. One key aspect of that, and again, like this was, as has already been mentioned, what we're trying to do here is build off of the best of what was already out there. So a lot of this should look very familiar. It's not coming from scratch. So one of the first things is to recognize that the TCFD, in developing its guidance, which is fairly high level guidance, related to climate disclosures, that the structure has been widely accepted, I think, throughout the world as a very useful structure. So thinking about the aspects of governance, risk management strategy, and then metrics reporting. So that structure is useful, and not only for climate, but actually can be useful for understanding actually any sustainability related risks or opportunities that a company has and how they are factoring that into their corporate planning. And so what S1 does is that actually elevates the structure of TCFD to say, you don't need to only talk about governance over climate-related issues. You need to talk about governance over sustainability-related issues, including climate. And so, so that's one key aspect of turning this focus of what the objectives are into decision useful information. But then going beyond that, the S1 also talks about the importance of industry-specific disclosures. And there was very clear feedback that came to the ISSB through our public consultations that from the investor voice in particular, that it's key to understand, you really need to understand things that are going to also be industry specific, because we do know that there are, of course, issues that most companies face, but not all companies face the same issues. Some are more industry specific. And then even when there are issues that tend to manifest across many industries, issues like climate, the way in which they're going to manifest themselves will often still be industry specific. Sometimes it's going to, relate to, when we think about climate, the physical risks might be more prominent in some types of industries. Transition risks might be more prominent in other types of industries, or the ways in which those are going to manifest could be quite different given a company's activities. Are they major contributors to some of the issues, and so you can expect there to be changing regulation around that, or are they basically affected by what's happening in the world and by other companies? And so you need to figure out how their strategy is going to be resilient to those issues. So S1 covers all of this at a high level, and then is going to help companies look to application guidance for that. And so one of the ways I would think about this is that S1 lays out a lot of the high-level disclosure requirements, but doesn't actually translate that into all of the detailed guidance that companies would need to produce, for one company to produce information that's going to be then pretty comparable for a second company. But it does point to, for example, I'll mention this in just a second, but it points to where there are going to be useful sources of guidance to help companies, while the ISSB is then building out the rest of the suite of standards that it will have. So the very first way to then think about additional ISSB guidance that's going to help a company take a specific set of issues and translate that into useful disclosures for investors is S2. So S2 says, okay, well, when it comes to climate-related issues, what is it that investors are going to need to know? And so, rather than saying at a high level, talk about your risks and opportunities, it's going to say, well, think about physical risks and transition risks specifically. That's key aspects of what the TCFD had built out from its consultation and work. And so that's been incorporated fully into S2. It asks companies to talk about what are their strategies, and specifically, like strategies for all sustainability is covered in S1, but when it comes to climate-related issues, the specific strategy that we've heard that investors want to know about is like, what is your transition plan? As we think about a transition to a low carbon resilient economy, what is it that a company's transition plan is? What are they expecting there to be major changes in what they're going to be allowed to do as a company? Are they expecting there to be major changes in the way that consumers are going to want to consume their products or services? And if that's true, what's their plan to get from point A to point B? So this is some of what's then unpacked in S2. One of the key things in thinking about a strategy is how resilient is it to what might be changing in the world around it. And so for climate-related strategies, we ask companies to disclose the climate resilience of their business strategy and to disclose what sort of scenarios they're anticipating. What are they planning for? We're not telling companies what they should plan for, but we are telling them that investors want to know about how companies are planning for the future. And that's going to be what helps investors to distinguish one company from another. When companies have identified climate-related issues as being something that is going to be of interest to investors for their investors, given their business activities, these are the types of disclosures that they're going to need to provide. And we also identify at a high level, the importance of talking about your greenhouse gas footprint, which isn't to say that we would be asking every company to disclose scope 1, 2, and 3 in all complete categories of their scope 3. Because again, the focus in all of the ISSB disclosures is on material information. So thinking about what are the material aspects of a company's transition risk, for example. So where is it specifically that they're expecting their business to need to adapt? And so that's going to be a key aspect of that. And to help provide guidance on that, both S1 and S2 are focused on industry-specific disclosures. And so point to, and on the next slide, you can see this, point to the importance of thinking about the guidance that has already been market tested through the SASB standards, and that now the ISSB has responsibility for maintaining. So both S1 and S2 recognize this, and S1 would say that in the absence of specific guidance like a climate standard, which we now are very close to having, that what a company would need to do is to provide insight into what would be some of the key sustainability-related risks and opportunities that investors would need to know about. It's like to look to the SASB industry standards that would be applicable for a given company to identify what those issues are. When we think about what's in S2, we've already taken the climate-related content that's in the SASB standards and translated that into, basically like moved that into the guidance for S2 that would help companies to then know what are the specific aspects of climate that are in the SASB standards. So hopefully, like this is a process for translating all of the existing guidance out there, taking it through the ISSB's due process. But we're building out a suite of standards that are going to help companies to produce information that's material and useful for investors, and that will be hopefully cost effective for companies to implement over time. So let me just quickly cover, I know we want to get to Q&A, so leave plenty of opportunity for that. But I want to talk about a couple of key things. We recognize that this is going to be in some ways like a big lift for companies around the world, and probably more so in some jurisdictions than in others, and for some types of companies than others. Large companies in developed markets often have already been engaged in TCFD, SASB, CDSB reporting, and so it's a matter of understanding the way we brought it all together, but not necessarily breaking new ground. For other companies, it's going to be a significant step forward, and so we're building into the guidance and the standards and the requirements a number of important mechanisms to support the application of the standards. And so some of it is just simply using terminology and concepts that bringing them together, picking the best ones, the clearest ones, and helping then everybody to speak the same language. But importantly, there are three other aspects. And so thinking about like transition reliefs, what is it that wouldn't be required yet, but would ultimately be required? What is it that we can then sort of expect on an ongoing basis in terms of like proportionality, understanding where companies are at, based on, we don't expect all companies to have to do all of the same things because they don't all face the same exposure to the risks and opportunities, or to the same degree. So proportionality is built into the reporting requirements, especially through understanding aspects of like using reasonable and supportable information, or focus on things that wouldn't have undue cost or effort, recognizing that the skills and capabilities of companies are going to be different. And then we're also providing guidance through both the guidance in the standards as well as supporting educational materials that will help companies to be able to understand how to implement all of this guidance. Just quickly, a couple examples of the reliefs that you might expect, that you can expect in first years of application. On the next slide is that we recognize that climate is one of the most pressing issues, and so if companies don't feel that they are in a position to report out on all of their sustainability related risks and opportunities, we think it's okay if they start the first year with a climate related focus, and then subsequent years focus on then, based on what they've learned through the climate related reporting on how to assess their value chain, for example, they can then start to translate that into non-climate related issues and in compliance with S1. There are some other reliefs around scope 3, et cetera, to give them a bit of a break in the first year, not having to necessarily switch to the use of the greenhouse gas protocol if that's not what they've already been using. So a few things just in transition to make it easier for companies if this is not what they've already been doing. And then quickly to talk about some of what we're working on going forward. We have 2 consultations that are out right now. The first one is on the request for information on what we should focus on over the next couple of years. This is not, those of you who are familiar with the IFRS Foundation, the IASB's approach, sort of think of like strategic planning being more of like a 5-year time horizon. But we sort of recognize that right now the ISSB is in the early stages of its development and work. And so we've done a bunch, and we want to kind of think strategically about what we do over the next couple of years, and then engage in more of like a robust 5-year planning model after that. So for the next couple of years, right now we're asking our stakeholders to give us input on what they think we should be focused on. And one of the key things here is to recognize that there are some things that we just have to be focused on, for sure. And that's thinking about supporting implementation of S1 and S2, our first standards to come out. We recognize that the SASB standards are an important part of how companies can apply S1 and S2. And so we also need to think about enhancing the SASB standards. And I'll talk about this, a particular focus on that in just a moment. And then we also need to think about anything else that we've learned in the early reads from as companies start to look at our actual standards for S1 and S2 when they're released later this month. What is it that that we can also do to have targeted enhancements to those standards so that we get off on the right foot there? Then, if we have, to the extent that we've got additional resource capacity, bandwidth, we're going to think about what is it that we next need to turn to. And so one of the requests for information is asking about four specific areas of potential focus that we could also then turn to. We could think about, and this is based on feedback that we've already gotten, and we're looking for broader feedback on this. So 3 things that we've heard a lot about recently are biodiversity, human capital, and human rights. And so we have a consultation out to ask the extent to which any of these are things that our stakeholders think we should prioritize, and if so, to what extent do they see these as being issues that manifest universally across all types of industries, across all types of jurisdictions, or to what extent are the issues and the information that would be useful related to those issues likely to manifest differently in different jurisdictions, or based on different types of industries that companies operate in, because that can inform the approach that the ISSB would then use to try to address those issues. Another issue that we've heard a lot about is thinking about the extent to which it's important to think about the ways in which the disclosures that we have will intersect with financial accounting disclosures as well. A lot of what we have done in S1 is focused on connectivity. And so to some extent, we are already sort of connecting the dots there between sustainability disclosures and what's presented in financial statements. But we know there's future opportunities to do work there. And so we're trying to understand the importance of prioritizing that, and also whether this would be something that we would need to do jointly with the IASB. What would be the implications for companies that use other GAAP reporting standards around the world? Because there are, it's not only the IASB. And we want our standards at the ISSB to be gap agnostic in a sense. So what's the best way to think about that? So that's one of the things that we're also asking about. And then just quickly, last thing on the SASB standards is that we are also taking a consultation right now, recognizing the fact that the SASB standards did begin with the US focus, and we've been working on that for a number of years. And part of what we did in developing S2 was to internationalize the climate-related content of the SASB standards, but we hadn't yet had a chance to do that for the other 2/3 of the content in the SASB standards, most of which was already, I think, internationally applicable. And it's important to note that actually there are more companies outside the US than inside the US using the SASB standards. However, we do understand and have identified about 20% of the content of the SASB standards that contain jurisdiction-specific references. So we have an approach to try to address that, and it's basically building off of the approach that we had used in doing this for the climate-related content. So we're asking for public comment on that right now as well. Is this the right methodology? Is the goal that we're focused on the right goal? And do our stakeholders also have additional guidance as well in terms of beyond this specific focus on the jurisdiction-specific references? What other things would make the SASB standards more internationally applicable? And so there's also an opportunity for our stakeholders to give us broader guidance on that can help to inform the ISSB strategy with respect to the SASB standards going forward. So maybe I'll go ahead and stop there and pass it back to Neil.
Thank you very much, Jeff. It was I think, a really terrific, pretty deep dive into our standards and the work of the ISSB. Just to finish up and conclude before I hand it back to Vikram for Q&A, I want to emphasize the tremendous momentum and support for the ISSB standards. I think sometimes companies which are already overwhelmed by voluntary standards and frameworks, sometimes mandatory reporting regimes, ratings, rankings, demands from investors, they look at a new set of standards and they say, well, why should we pay attention to this? This is different this time. This is really backed by the securities regulators, by governments, by central banks. You can see this in the very strong statements of support that we've had coming out of the G20, the G7, the B20. And I think this is also very particularly relevant in this year of India's G20 presidency. What happens now, this is a team effort. The ISSB, we're coming out with our standards at the end of this month. IOSCO is reviewing the standards with a view to endorsing them for their 130 member jurisdictions around the world. We need audit standards for auditing disclosure. The ISSB does not require assurance, but we expect many jurisdictions, as Rajiv explained, we expect many jurisdictions to eventually be requiring assurance. The International Audit and Assurance Standards Board, the IAASB, is expected out with an exposure draft this month of a new assurance standard for ESG. Different jurisdictions have already begun committing to adopting the ISSB standards into their rules, including, for example, the UK, Brazil, Japan, many countries around the world are already on that path. And then, of course, we expect companies to begin voluntarily applying the standards very soon. We're already seeing references to the ISSB in company reports. Companies really see this as the natural evolution, the logical next step from TCFD and SASB into investor-focused ISSB reporting. Let me conclude there and just want to say thanks again, Dr. Rajan and Vikram, for hosting us today.
Thank you so much, Neil, Jeff, and Rajiv, for giving us a detailed showcase of what ISSB is doing and the standards that ISSB is coming out with, S1 and S2, very shortly. So before we conclude this, we would take in some questions from the audience. So if participants have any questions, then please type them out in the Q&A. While we check that, Dr. Rajan, if you have any questions for them before I can take the audience question.
No, let's get into the audience. I noticed right at the start, there've already a few questions in the chat box. So
Right.
maybe we can start with those.
Right. So just reading out the questions from the chat box, what our participants have raised. How do S1 and S2 help in preparing the data for NDCs for a reader to understand adaptation and mitigation steps taken by company for scope 1, 2, 3?
So yeah, I'll just start on that and hand over to you, Jeff. And I think this is a good example of exactly how a common language of communicating around climate targets, goals, and progress can really help in the larger movement towards climate adaptation and mitigation. And the standards are designed exactly for that very clear common language around emissions and around goals, commitments, and reaching those goals.
Yeah, maybe. Thanks, Neil. What I would add to that is, if you think about the way that the Paris Climate Accord has kind of come together with this approach of different nations bringing their own nationally determined contributions to the table, what that is recognizing, and what that implies at the end of the day then is that companies are not going to face the same sorts of issues everywhere around the world. There's a recognition that in many of the developing countries, they are not major contributors to the climate crisis that we have. A lot of that is in the developed world, not entirely, but a lot of that. And so to the extent that different countries are going to bring different contributions to the table to try to meet our global climate crisis where it needs to be met at, that's going to have different implications for different types of companies. Those that are operating in jurisdictions that don't have to make such severe cuts to their emissions because they're not producing them as much aren't going to have the same sorts of transition risks or opportunities really in the same way as in other countries where they have committed to more severe, more sooner and larger cuts to their national greenhouse gas footprint. And so the standards, S2 in particular on this one, don't say, oh, we think that every company is going to face this kind of transition risk, because we recognize that those transition risks will be different for precisely this reason. If the Paris Climate Accord had said every country and every company is going to need an X% cut, well, then if that's what the whole world had agreed to, that would create a different world in which companies would then have to adapt their footprint, their operations to meet those requirements in that regulation. That's not the world that we've agreed on. And so S2 is recognizing the jurisdictional nuance because of the way in which we're tackling this at a global level. So I think that's also important to recognize.
Thank you, Jeff. Thank you, Neil. I hope that clears out the question our participant asked. Next is the participant would like to understand the competing challenge between uniform reporting versus industry-specific nuance in standards. In your collaboration with GRI, are we going to have an eventual landscape where industry-specific standards come out in future?
No, yeah, it's a great question. Maybe one way I would think about this is, I would think about greenhouse gas footprints and the ability to create a CO2 equivalent. And because of what that does is that allows all sorts of different types of greenhouse gases to be equated to a CO2 equivalent, right? And so you can take methane and equate it with carbon dioxide. for example. Now we know that like in that conversion, that requires some assumptions, and there's a bit of loss of information there. But the other thing that like scope 1, 2, and 3 allows you to do is take any of those greenhouse gas emissions anywhere in the value chain and create, in a sense, like an equivalency by saying, what is the total greenhouse gas footprint measured in CO2 equivalents? So you can get a lot of, in a sense, like uniformity by having every company apply this. And in doing that, you could get like a single measure that every company could report. That's really helpful, but also you have to also recognize that there's a ton of information that gets collapsed into that total greenhouse gas footprint with a CO2 equivalent. And so one of the things that the industry guidance can do, for example, is say, well, in which industries is it going to be very important to understand what part of your total greenhouse gas footprint is coming from methane? And also, where in your value chain is it coming from? Is this direct emissions, or is this from specific types of business activities, or is it your business partners' activities that are creating a market for those kinds of emissions? So that can be really important as well. And so some of the industry specificity allows us to say, if you're in oil and gas exploration, you also need to break out. We don't need every company to report on methane, but we do need some, like in the oil and gas industry. That's going to be particularly prominent for exploration and production types of companies. And then, recognizing also that it isn't just the greenhouse gas footprint of in the use phase of emissions that we need to know at like an abstract level. That can be helpful. But if you're an automobiles company, it's also really helpful to then say, and by the way, a big part of your use phase, the downstream emissions is from your customers driving the vehicles that you're selling them. So what are those vehicles? What types of vehicles? Are they zero emission? Are they hybrid? What's the fuel efficiency of them? Where are you selling them? And how that relates back to different countries having different nationally determined contributions, and so expecting different fuel efficiency requirements. So the industry part is really crucial. I think there are very few things that, when useful at a uniform level, are more useful with the industry supports. Some of this industry specificity broken out. We're working with GRI. GRI has just begun their sector work, and I think they have 3 sector standards that they've already launched. If you look at those, they've been very helpful in saying for their 3 sectors. So they have oil and gas, they have coal, and then agriculture, aquaculture. They basically say, by the way, if you are a company and you're applying these standards, here's also the SASB industry standards that would be applicable for companies operating in these sectors. So they're helping to map between the SASB industry structure and then the structure that they're developing from a sector perspective. The European standards have a plan to do sector work. The GRI is doing sector work. We've heard repeatedly that industry sector standards are really important. So everybody sort of recognizes that you have to meet businesses where they have at the point where it reflects what they do as a business. And so that's really important. I don't know that we're going to have one particular understanding of the best way to structure all of this, but I do think we're going to have over time more interoperability where we can say, if this is what you do, here are the investor-oriented standards that are going to relate to your business model, and then here are the broader stakeholder or jurisdiction-specific requirements for your same company. And I think that mapping will be pretty easy, even if the reporting requirements are likely to be different. But we're not there yet, but I think we can get there.
Vikram, if I may, I think if it would be helpful, maybe I could quickly answer a few of these quite straightforward questions very quickly. One is, will ISSB reporting be in XBRL? Yes, that's digital tagging, right? And this is extremely important for investor use of the information. And importantly, we're working closely with different jurisdictions, particularly Europe, to make sure that we have common XBRL tagging across different jurisdictions, vital for interoperability. Another question, what courses can you take for ESG professionals We have a certification called Fundamentals of Sustainability Accounting, which is an extremely good self-study proctored exam course, 2-level credential. But importantly, a big focus for the ISSB will be what we call capacity building, which includes training and educational materials, both and with partners, for example, with stock exchanges and with others, where you'll see these materials coming out for e-learning online, as well as a train the trainers approach and having trainers around the world. And importantly, for capacity building, and this relates back to one of Dr. Rajan's initial questions, in capacity building, we do have a very particular focus on the global south, on developing countries. And in fact, we at COP27 in the fall, we set up a partnership framework with 30 founding partners, including all the big 4 accounting firms, to focus on capacity building and to focus on the global south. Also a question, will there be an ISSB Lite for small and medium enterprises? We are not doing that now. But as Jeff explained, we're really have introduced provisions for proportionality and for reliefs, so that phasing and scaling, using reasonable and supportable information without undue cost or effort, considering a company's knowledge and skills, and then and the reliefs to phase in the requirements are really meant to help smaller companies, also to help certain industries, emerging markets, time to come up to speed. So I hope that helps to answer a few of those more straightforward questions.
Thank you, Neil. Thank you, Neil, for taking that up and saving some time for me to close the session. If there are no other questions from the audience. So while someone is typing, I just wanted to inform you, we would be having a panel discussion on the standards planned up soon, maybe next couple of months, so where we can discuss the whole area of standards, sustainability standards, reporting, and the S1 and S2 coming up, and how industry sees it. So we'll try to bring in some industry members there. So that is still being planned. I'll be in touch with Rajiv to make sure that happens soon. If no one else has any questions, I would like to thank you from FICCI's behalf. Thank you, Jeff, Neil, Rajiv, Dr. Rajan, for being here, for being a part of this session, for making this talk, this webinar, a great webinar for us to learn the new developments happening in this field. And we look forward to having more such discussions in future. This is just the beginning, and hopefully this association and such occasions, such events keep happening regularly, so that not only us, but the participants and the Indian industry and the people who are involved in the whole reporting ecosystem are aware of the developments. So I thank you once again from
Thank you.
Here, Asim, Shruti, and Sheetal, and myself are really thankful. And before the webinar closes, I would request Dr. Rajan to make his closing remarks before we say bye.
No, this is fantastic. I think it clarified a lot of issues for all of us. I think we heard very clearly that investors and companies are key stakeholders that the whole process is focused on. Gratified to hear about the role that the ICAI and others are playing in the development of these standards. And the fact very clearly that this is already building off international best practice, the best that's already available. So to that extent, there shouldn't be that much concern about what's coming down the pipe. But I think we need to all be aware that there is going to be publication of these standards fairly soon. There are some clear reliefs that will be initially available that perhaps will then vanish after some time. But I think industry has to now scale up, understand what's coming, and participate in this process. I think the more input all of us can provide, the more these standards will be relevant to what the market really needs. And we we touched a little bit upon some of the differentiation across markets. So I think this is very, very helpful. And as Vikram said, very much look forward to more of this. So very grateful once again, Jeffrey, Neil, Rajiv, for doing this. And we hope to see more of you in the course of certainly this year and time ahead. Thank you very much.
Pleasure.
Thank you. Thank you very much.